I find actually with most people, the challenge is that they'll do all of the spend and all of the effort, and they'll just stop short at the point where they might actually get something out of it. When it comes to your taxes, the choices you make matter. The answer to that question is actually pretty straightforward, but complicated at the same time. People always say to me, you work for the multinationals, they don't pay much tax. Why can't you do the same thing for me? Or they might just say, what do they do? Can I do the same thing? Basically, it's the same question, isn't it? Apparently, these multinationals aren't paying very much. They have some sort of secret, and everybody else does it, and they want to know what it is. Now, the answer to that question is actually pretty straightforward, but complicated at the same time. The thing is, the tax rules apply to everyone and they're the same. But the tax rules are all contained here. In these books, you will get the answers to all of your questions. It's just a lot of reading. And I'd probably say, rather than leaving it like that, which is a cop out, I'd probably just answer it like this. I'd say, the choices that you make matter. When it comes to your taxes, the choices you make matter. And what's an example of a choice? I'll give you a really basic example that illustrates the point. There are some people out there who are working on developing the next best thing. They might be sitting in their garage trying to invent something, and they're slaving away, working hard and all that, trying to create something new. Okay? Now, they're buying things, and they're not making any money, but they're buying things. At the end of the year, when it comes to their taxes, they're thinking, well, obviously I'm not going to pay anything because I haven't actually earned anything. I've just been outlaying money. Now, if that person had set up a company instead, they might be able to claim the R&D tax incentive and they'll actually get a tax refund, even though they made a loss. The only difference is one person didn't set up a company and the other person did. Now, a multinational or a more sophisticated taxpayer knows those rules. And so what they'll do is they'll say, look, I'm inventing something too. And I'm not going to make money from this for a while. And there's a chance for me to get some money back from the government. And I know I need to set up a company to do that. And so they'll do exactly the same thing with a company. So then you have two people doing exactly the same thing. One of them has set up a company. They're claiming the R&D grant and getting money back. The other one is not, and they're getting nothing. That's what I mean by the choices that you make matter. And where you get caught is you don't actually know what those choices are. The tax law has a lot of things in there when they're trying to encourage people to do things. The government's trying to incentivize people to do things, saying if you do it this way, we'll give you a bit of a break. It's all in there if you take the time to read it. And if you don't do it that way, well, it's too bad. But if you don't know, how are you supposed to take advantage of that situation? So tax at its essence is a very basic formula. It just takes your income, subtracts your deductions, times it by a tax rate minus tax offsets, and that's how much you need to pay. It's a very basic formula. But the detail is what's included in income, what's the deduction, what's the appropriate tax rate, what are the tax offsets, and is there any three-dimensional thing outside of that formula that I need to be aware of? So I find actually with most people, the challenge is that they'll do all of the spend and all of the effort, and they'll just stop short at the point where they might actually get something out of it. Everyone has to pay their taxes every year, right? They have to collect their receipts, they have to put it together. If they're running a business, they have to do their profit and loss, they have to do their accounting to some degree. And people will do that work, and they'll get it to a point where they can do their taxes. And at that point, they're not getting that much benefit out of it. But if you take it that little step further and you say, okay, I've got this set of data here, I can use it to model my cash flow. I can use it to plan ahead. I can use it to see if there are any choices that I could make or any government incentives that might be available for me next year, then all of a sudden you're taking a benefit out of it. But most people stop at the point just before the benefit arrives. They say, I'm done now. I've spent my money. I've done my taxes, and they hand in whatever. And sometimes they don't want to spend a lot on that process, and so they end up paying more taxes than they're supposed to. And that happens a lot, where you get that sense that, well, I haven't paid a lot for the bookkeeping work, and at least I'm, and there's an assumption that the taxes are the same, but they're not. We've gone through many examples. This person who made no money and their bookkeeper put some money in revenue, even though it was a transfer from one of her other bank accounts. You're paying tax on your own money now because the bookkeeper was a cheap person that they got from overseas. These things happen. There was that guy who was paying his revenue twice. Somehow he put hidden his revenue in his accounting software, and then when the bank revenue came in, put that in, and so ended up paying tax on double the revenue, which is like a double tax rate, right? People miss things, especially cryptocurrency. Everyone loves to talk about their gains, and so they put all their gains in. They're too embarrassed to talk about their losses, so they pretend they didn't happen. Then they get this big tax bill. You could have claimed those losses, because overall you didn't actually make as big a gain as you thought because you have some losses as well. And this is a recurring pattern that we see time and again. And so when people say to me, what do these multinationals do? They don't do any of this stuff. They plan ahead, they do the work and then take the full benefit of the work. They don't leave losses on the table. Their accounting software isn't done, their accounting work isn't done so cheaply that they're claiming, putting revenue in that's actually their own savings. These things don't happen. These are the differences. These small things, they all add up. And it's remarkable how many people have something or other. I would struggle to think of anybody whose accounts we've looked at who haven't had some sort of issue of some kind somewhere, right? It would be a tough ask for me to find that. But if you ask me, if I saw any of that stuff on the other end of town, I would have fallen off my chair if I saw the types of errors that people make, the amounts of money that they leave on the table and all that.